Oz, tell us about your business and what's limiting its growth right now.
I'm the founder of Business Lending Blueprint. So we help people learn how to become business loan brokers. So they come in with the idea of getting into an industry that is not as impacted by the recession. There's a massive demand, and the demand for money, as you know, is massive, like from existing businesses or startups. So years ago, we were helping existing funders get more leads, and over time, it transitioned into helping everyday people break into the alternative lending industry. That's what we've been doing over the past 10 years collectively. One thing that would allow us to grow faster is the hiring process, recruiting process, adding more A players into the team.
So that's your biggest constraint, talent?
Correct, talent. Yeah, we don't have any demand problem. We have more leads than we know what to do with. It's just finding the right players and training them properly and adding them to our team.
Okay, so I'll put training and hiring as the constraint. Okay, let's talk about the goals. Tell me, what's a 3-year revenue target you have set for yourself, and what was the revenue last year?
So last year revenue, we broke about $5.5 million on the front end revenue, but we also have a funding department. So we evaluate it separately. So the deal's being funded. And the 3-year goal is at the end of 3 years, we want to take the company to about $2 million a month in front end revenue.
Oh, wow. Okay. So 2 million. So that's 24 million for the yearly, right?
Yes.
Yeah, that's a really high goal, and it's an ambitious, but I'm sure you have a plan for it, which we'll get into soon. But before we do, let's go a little bit deeper on the business. So you're helping other businesses get access to alternative lending. Is that the whole premise?
We're helping people become the middleman, the business loan broker between the companies who need money and the lenders who provide money. They're learning basically how to sell business loans to startups and small businesses. And we also provide the back end. So we have our own lender network who wants those kind of deals. They can do the underwriting and the funding. We eliminate the figuring out trial and error part for the average people, ambitious people, to go find the lenders, understand how to do the underwriting, generating leads. The training component covers that, and back end allows them to unleash their skill set basically to send more leads. And as deals get funded, they make money.
Right. So you're essentially, so the person will be a middleman between a business that needs funding and the funders.
Correct.
Right? Okay. So why target people who want to be middlemen? Why not target businesses that actually need funding?
Because lenders do not run like a training business, so they do their own targeting. Like for lenders, for example, they run their own ads to get in front of businesses. But there are more businesses than we can handle on our own. So when you think about it, in our network, we have 7,000 business loan brokers, and there are like 34 million small businesses, and every day about 3,000 to 4,000 of them are being formed. So I thought we can do that, and we can grow like a funding company. That's what we did when we first started out. This didn't start out as like a training company, but we noticed that the pie is like really, really big, and there's not enough brokers, and the lenders were not willing to provide training. They just have access to capital, and they just want to make more money with their money. So we create this hybrid approach. Yeah, we can still fund deals, but it is a lot better for the humanity. I can call people learn how the finance works. They can get in and make their money, and they generate the leads, and it takes care of the lead generation issue for the lenders versus them doing it on their own.
Yeah, I talked to a lot of founders, and pretty much, I wouldn't say everyone, but a big majority of them are looking some kind of funding or some kind of a partnership. So there's definitely a high demand for that. So is that something you still provide, where if a business is like, well, I need help generating like $10 million and my business is growing too fast, would you still help them, or would you rather still act as a broker?
No, we still help them because our email list is massive, right? Some people come to us, they see, like you were telling me, you're seeing my ads now. A lot of people see my ads, but not everyone immediately thinks about becoming a business loan broker. Some of them are already in business and they need capital. They send us an email saying that, hey, I like your program, but I'm not interested in becoming a business loan broker. Can I get funding? Yeah, we still put them through our system if that's the case, but we're not intentionally targeting those businesses because for us, we get them anyways, like with our system.
Let's go a little bit deeper on that backend system, right? So is that a network of like private lenders, or is it a mix of like banks that are not at the national level, like local banks? Like tell us what makes this backend system that's providing funding.
It's actually both. So we have certain banks that offer bank-backed products like business line of credits. We have SBA lenders, Small Business Administration-backed funding. Again, usually banks fund it, but is backed by the Small Business Administration. Those are like longer-term funding options. We have, family offices for larger deals. They fund anywhere from 10 million to $500 million for super large projects. One of our members are helping fund a deal in Dubai before the war. I don't know what's happening with the deal right now, but someone was building a hotel there. Someone was building a strip mall in Ireland. So those are like the bigger, longer term deals. We also have private lenders. Some of them are hedge funds or individuals with money. They provide super short term lending options. This could be a working capital. These are usually smaller amounts, anywhere from like 10,000 to 2 million. It could be like in the form of a merchant cash advance. We have really unique funding options such as invoice factoring. Are you familiar with invoice factoring?
No, yeah, please tell me.
Yeah. So, for example, you have a fencing company. You build fences, and you get a project from the local government for the school system, right? You're going to put fence around the school system. As a fencing company, you get the job, and they accept your quote, and that's like, let's say, $500,000 job. They pay you, but they pay you in terms of like net 30, net 60, or net 90, right? So, as a small business, like a fencing company, let's say this is a 3-month project, you have to pay your employees every single week. But even after you get paid, you can't cash the check for like 60, 90 days. Invoice factoring
Mm,
companies take that check and give you the money. They give you a percentage of it, probably like 95, 96% of it. So you get the cash immediately. You lose like 5%, but you can still run your business and bid on those bigger projects. So it's like
mm,
factoring on the future invoices that you get from a larger projects, fire departments, schools, or if you're like, I don't know, painting Walmart is not going to just pay you cash or ACH. They're going to cut you a check, and there are terms. So it allows small business to survive longer terms when the money is coming, but there's a time period.
mm. I see. So it is a mix of short-term funders and long-term funders,
I would
right?
say short term and midterm, because when I say long term, people think that, oh, we have like 30-year options. The furthest we go is like 10 years, which is what SBA. Yeah.
Oh, I see. Okay, 10 years is the max.
Yes.
So whose responsibility is it to match them with the right lender, right?
That's
So say
us.
I'm the broker, right? So let's set up the context. Say
Yes.
I become a broker, right? And I know someone who comes on my show and they need funding, and I obviously now I'm the broker and I'm tapping into your backend, right?
Hmm.
So how would I know what's the best product, who's the best person to match them with?
Great question. So I think that's why a lot of people are paying us money to get into the program, because we have our own software. Basically, it's an AI-driven software. So we take years of experience and data and statements that we have, and have trained our system. So we have the human and non-human approach. You can jump on the live calls that we do 4 or 5 times a week, training the brokers on how to qualify, or they can simply speak with our AI bot. We call him Benny, and ask the questions, give it the simple metrics, the time in business, how much do they need, what are they looking to do, how soon they need the money, the credit scores of the founders and the owners. It does the matching process for you. It tells you, hey, this person is a good fit for, let's say, 2 of the funding options. Then the broker, without needing to master the underwriting and understand, like, we have 12 different funding options. So we don't expect someone who joined BLB a month ago to understand all of that. So they can utilize AI, and it automatically filters everything for them. And then it also tells what kind of documentation is needed if they want to take it to the next stage. What I mean by that is, we have brokers who are in the refer and earn system, meaning that they're not really interested in collecting documentation. They generate the lead, they hand it off to us. So not only our system qualifies it for the specific funding option, we also have an internal team calling that prospect on your behalf and say, hey, Abi referred us to you. Looks like you're looking for funding. Here is what I need from you to take it to the next phase. And so we can just get the offers on the table and close it on behalf of the broker. Or the broker, if they choose to do it, they can carry it through until the end. And their involvement determines how much commission they make. But we make it pretty beginner friendly or also advanced friendly. That's why we have that system. That system in the middle is so important, Abby. Otherwise, yeah, you can Google lenders, but how are they going to learn each funding options, the qualifications? They need to be able to talk to someone. That's why the training program is thriving, because we figured out that part.
Right. Okay. So I understand there's an AI that can figure this out, but I wanted to understand like the nuts and bolts of how like what the decision tree looks like when
Hmm.
you make that decision, right?
Sure.
So you have this qualification person, so the qualification process, right? Tell me the steps it's looking at. So you did mention some of them. You're like, well, how long have you been in the business? What's the purpose of the funds? How long do you need it for? So tell us more of like what the qualification process looks like, and then how do you determine which is the best funder to match them with? Because I'm guessing there are some funders that have a similar criteria. So I also want to understand how you rank them, which one gets the first dibs on this client.
Yeah. So papers are graded A through D, right? So it's like a grading system. A meaning top of the line customer with the best credit, longer time on business, profitability, and all of that, right? And D paper is someone with pretty short credit, like their credit is bad. The time in business could be like 3 months. Their revenue is kind of on the lower end. So that's one of the ways that we determine who we go with. The other part of that is what the client wants, right? I'll give you two examples. So let's say you have a restaurant. The owner's credit score is pretty bad, let's say in 500s, right? And the fridge broke. So they need to get that fixed ASAP. They can't be an underwriting process that takes a week, 2 weeks, and like it's an emergency type of funding. So what we want to know at that point is, all right, we can't really use the credit. Credit is bad. We have to base it on the revenue. So this automatically qualifies as revenue-based financing. So we have to look at how much does the business make. Let's say the restaurant makes $50,000 a month, and we ask for 3 months of bank statements to see the funding that we provide will be suitable for them to pay it off, right? That's the underwriting process. We don't want to set them up with a funding option that they can't pay off, and they want the money like yesterday. So that's going to be the most expensive form of money because we can't. There's no collateral. We don't put a lien on the restaurant or the cars or anything like that. The vehicles. So the restaurant is doing 50K. In that case, if the numbers add up, we usually provide anywhere from 80 to 125% of the monthly revenue. In this case, let's say we say 100% of the monthly revenue, we will be able to tell that merchant, you make 50K, yeah, we can deploy 50K to your bank account tomorrow. So it can happen within 24 to 48 hours, right?
Hmm.
That merchant will have to pay back at a higher cost. Usually the amount they're going to pay back could be 60, 65,000. But that's in their giving situation. There's no collateral, bad credit score, not a crazy amount of volume, and they want the money super fast. So that's the most expensive. The least expensive one is the SBA, for example, right? Government. And these are the merchants who want to do an acquisition. They want to expand the current building. They do their tax returns. So we have access to the tax returns. And they've been in business for at least a year, and they do about 1 million or more per year in revenue, right? And they have the time, meaning that they're okay to wait anywhere from 3 weeks to 2 months for the whole process because the SBA is a little different. So those are the factors that we take into consideration. We also deal with people who do not own a business right now. This is like a pre-revenue startup. Abi comes to us, says, I have a great podcast company. I want to start this and I need funding for equipment. I need like 50K. And we don't have a business. There's no revenue. There's no LLC. There's no collateral. The only thing we rely on is your credit score. If it is 680 and above, we create startup funding. So usually we can provide anywhere from 10,000 to 150,000, strictly based on the person's credit report. So all of I gave like 3 examples, but we have 12 products. So as you can see, the decision tree keeps expanding based on the responses given by the customer and the documentation we collect. But the simplicity for the broker is that we don't need a lot of documentation. Usually, regardless of what they say, we want to get a one-page application. Our application is super simple, 3 months of bank statement and one credit report, right? That gives us the full picture of the business. Then we can place it accordingly.
Hmm. When you say we, right? You said, well, we need this many months of like bank statements. Should be the credit score. Are you when you say we, are you representing as in you, like your company? Because I'm guessing the underwriting requirements for each funder would be different,
Correct.
right? So how
So
do you how do you how do you
we
normalize the process?
Yeah, so we have a department called BLB Network. They analyze all of this before they shoot it out to the lenders because lenders do not have time to sift through. They have their own qualifications. We work with the brokers go through what I just showed you, either on a call or through AI, and tell the broker, hey, based on what you're giving me, if the client is like needs like $2 million and we're working with that restaurant example, we tell them it's not going to happen. We just don't have enough to provide it. Here is what we can potentially get approved. Is your merchant okay with that? Or are you okay with us calling the merchant, explaining that? Then we package the option and send it over to the appropriate lender to get an offer on the table. That's the we
And
part.
I see. So this appropriate lender, you already know what kind of documentation they need,
Oh,
right?
absolutely. Yes.
Okay. So you're essentially making both parties' life easy,
Yes.
right? Because you know what they want and you know what they need, and you are in the middle packaging it all together. So it saves time for everyone,
For
right?
everyone. That's why the lenders love us, because a broker goes to Google and tries to sign up with a lender. The biggest problem is they send the wrong leads to them, and now their underwriting needs to work for free because no one is making money until a deal is funded, right? They don't charge upfront application fees. There's no junk fees or processing fees. So they love BLB because we do that on their behalf. We know exactly the likelihood of them funding the deal. Send it over to the right person. All they have to do is look at the file and be like, yeah, here are the options. Sometimes they give 2, 3 funding options. Sometimes they do a deep dive and decide it's not a good fit. But that's why we have a very high approval rate, because if the deal is not doable, we tell the broker either A, get more information, or if they're adamant about a certain amount and the business doesn't support it, we tell them, yeah, it's not going to happen. So we don't waste lenders' times.
And when is the broker getting paid? Right away, as soon as it's closed?
Within 1 week of the deal, the money being deployed. So let's say put the money in the merchant's account this week, and they get paid usually next Thursday, and it's an ACH, their bank account.
Okay. So you also get paid at the same time, right?
We, not us as BLB network.
Yeah.
Yeah, we fund some of the deals ourselves in-house too. So we have a funding department as well. If you like the deal, we fund some of the deals. I know it's a little complicated, our structure. So on the front end, it looks like it's just a coaching company, but we have the lender network, and we're also the lenders for some of the deals.
Right. If you are farming this or like shipping this out to an external lender, you will also get paid during closing, right?
Correct. Yeah, we make a small percentage of that. But either way, we negotiate with the lenders, so our brokers make the higher amount than them going on their own, because we provide the volume. For the lender, it makes sense to pay the full amount to the broker and pay us a little bit too.
Okay. What happens in a scenario if we go back to the restaurant example and the restaurant owner defaults? They cannot pay anymore. Like they make the first 2 months payments and it's a year-long loan, and after that they can't pay anymore. The broker and you still get paid, right? They can take back, like claw back your commissions, right?
Most of the funding options don't have a clawback option, except for the merchant cash advances. Usually the clawback period is the first 30 days. And we're playing with a default rate of 3 to 5% on the merchant cash advance. So it's very less likelihood that it's going to happen. Out of the 100 deals, maybe 3 of them will go through that process. That's why it's like a double underwriting process. Like we're qualifying the lead, then sending it to the lender, and they're making the final decision. But yeah, so that's the only time there's like a clawback, if they fail within the first month, like they literally don't make their first monthly payment.
And if they don't make that first payment, or they default in a couple of months, I'm guessing their credit takes a hit as well?
Correct. Yeah. Yeah. Because think about this, like this is not non-collateralized. So we can't just put a lien, unlike the banks, right? Banks can put a lien on your house or your car. This is just based on future revenue. That's why the cost of the money in a merchant cash advance is much higher, because the risk is much higher.
Right. So we looked at a couple of examples, restaurant example with bad credit score. And then we also looked at, say, a company with a good credit score. And you said clearly the pre-revenue restaurant or bad credit score will have, their loan will be more expensive. That means they're charging, the lender will be charging more on interest.
Correct.
So tell us about all the fees involved. Like what would be a range of the interest, like going from good to bad credit? And also, are there other fees involved, like origination fee, like a monthly like maintenance fee? Like, tell me about all the fees and stuff.
It's difficult to answer because we're talking about 12 different funding options and each one of them is a little different, you know? But
Hmm.
if that restaurant is a merchant cash advance, it's not really a simple interest, it's the factor rate. So there's the amount that you're getting and there's the amount that you're paying back. It's calculated that way. If that restaurant is getting 50,000, they might be paying, depending on how strong the file is, 65 to $70,000 back. So that's what they know. And then that's the final payout amount is split into either weekly pays, daily pays, sometimes monthly pays, right? So the merchant sees that, all right, the cost of buying 50K for me is going to be 70K. As you can see, it's very expensive, but it's not a simple interest. It's like a factoring based on the future revenue. Then the monthly or weekly payments are determined. And that's when the merchant decides, yeah, I can afford this or I cannot afford this. And then obviously our underwriting team wouldn't really approve a deal if they couldn't afford it. But at the end of the day, they might have a slow season coming up. So at the end of the day, it's the merchant's decision. But that's the most expensive funding option. But the funding decision happens usually within 24 to 48 hours.
What is that? I'm guessing you still have to disclose in terms of APR what it would look like, right? So are we talking about like APR north of like 20-25%?
No, it's more expensive than that. In certain states, I think recent laws came out, you have to turn it into an APR. But other states, since this is not an actual annual percentage rate, it's like a buyout rate. You just explain to the merchant, this is like for your 50,000 is costing you 70K and you have to pay it back in 6 months. And this is what the weekly pays are. So depending on the state, I think Utah, New York, and California require our lenders to break it down, turn it into a percentage so they understand it.
Because I understand there's some states with usury laws as well, right? Where they cap the max APR you can charge. Is that, or does that not apply to your industry?
Not to, as to my knowledge, not to MCAs just yet, but there's a lot of certain states are especially California is trying to push a lot of laws that would make that a reality. But I think with the current administration, all of those efforts slow down.
Right. How are you keeping, like, do you have like an in-house lawyer keeping track of all the law changes? I'm guessing you work in all 50 states, right?
Yeah, we work in all different states. So each lender has their own licensing requirements and their legal team and things like that. So that's how they're staying compliant.
Oh, I see. So since you're a broker, it's the responsibilities on the
Exactly. So
end.
we don't really
Okay.
need to, because money is not coming from the broker and they're just the middle guy or the girl. It's the lender's responsibility to see, oh, okay, Abi's from California, so these laws apply, and we have to make the offer in this way versus someone in, I don't know, Alabama. It's a little different. So we don't really need to understand that part of it. The lenders handle that.
Right. Unless you are funding it in-house,
Unless we're
right?
funding it, but we're really picky on who we fund anyways. So we kind of pick and choose what works best for us. So we're not doing the bulk of the funding again, because we only do one type of funding, but we have 12 different funding options. So our goal is not to
Mm,
become an expert on underwriting on all of them.
right. I'm guessing so you're only doing, when you say you're cherry picking on which to fund, and I'm guessing you're only picking the ones that are like don't have these strict APR type laws, right?
So we're picking the files that are a lot less likely to default, because sometimes we get like D paper, right? So this is like really, really high risk. And then we don't really deal with high risk funding options. So if it is a clean paper, the business has been around for a while, the business owner shows good accounting practices and things like that. And then we can do like equipment financing if they want to buy a truck. And we know that they have 4 trucks on their fleet already. Adding a fifth truck would automatically add, let's say, another 100 grand to their business. And if the financials look good, like it's a clean file. This guy already knows the trucking business. He's been in business for a while. He made the other 3-4 trucks work. He's just adding this. The story makes sense, you know.
Hmm. If a person has high credit score, they have a clean file, wouldn't they first go to like their local bank or like a national bank, because they can easily get financing from there, right?
They should, but it's not easily. The disapproval rates on small business funding is about 85% through the banks. Unless they're like a larger, like a mid-sized business, for small businesses, very difficult for them to get funding. And we tell them, hey, we're in the alternative lending industry. If you have a way of getting funding from Bank of America, you should do that. But there are a couple of problems. One, there's a lot of paperwork that they need. Processing times can take 4 to 6 weeks. They usually require some kind of collateral, and they require tax returns. Some businesses do not want to provide it. They don't have the time for it, or they're too small for that.
Hmm.
So we're not in competition with the banks. It's just that's why it's alternative lending, because banks are not filling those shoes. Otherwise, we would not be in existence. And the alternative lending industry has been growing like crazy over the past 10 years.
Right. So you're only getting customers where the customers know or they've already been declined from the banks, right?
Most of the time, well, they don't even know that a lot of times alternative lending exists. They already went to their bank declined them, they gave them all kinds of reasons and things like that, or the money is an emergency. They know they're not going to get it from the bank. So they when they come to us, they understand that. And we ask the question, have you applied for bank funding before? They say, oh, yeah, I got declined, or my file is being processed. If that's the case, we tell them, hey, let's see if you can get something from the bank, because, for example, we have a business line of credit option. Bank's terms are much better. If someone can get a business line of credit from like PNC Bank or like any other bank, they should take it, because you want to get the money when you don't actually need it, right? So you want to have that on the side. If you need it, you can draw on it. You only pay when you draw on it. So we're in the totally alternative lending industry, so not bank lending.
How, like you mentioned, one of the benefits of getting funding from your network is you can get it done really quickly, right?
Correct. Fast.
So
Yeah.
how fast, like if say all the papers are ready, all the information is ready, how fast can you approve someone? Is it like less than 24 hours? What's the fastest?
If we get the file early in the morning, yeah, it could be same day funding.
What about like someone like a repeat customer? I'm guessing everything is already on file. That should be much faster, right? Same day.
We call it renewals. So like, let's say we fund someone, and 4 6 months down the line, we check with the lenders to find out what percentage of the loan they already paid off and what the renewal terms are. This is why it goes back into the underwriting process, right? And the lender tells us, hey, if they paid off, let's say 50% of that, we can provide more funding. So our team checks on each of the funded deals to find out the renewal terms. And based on that, we reach out to the merchant and tell them, hey, how are things going? Good, everything is good. Do you need more capital for marketing, business line of credit? And then if we do end up funding, we still pay the broker. So that way, even if some of the brokers get surprised when we send them a payment because they didn't even know that there was a renewal coming up for their customer. But yeah, those files are a lot easier because now we have a payment history with that specific lender. We see what's going on within the business,
These broker trainings, so once person comes on board, they get trained.
Yeah.
Is there like a licensing aspect to it as well? Like real estate agents get a license. Do business lending brokers also get a license, or there's no such thing?
There's no such thing just yet. But as the industry grows, there's going to be more regulation, so it might come up. But if it does, I mean, we're the largest training company in the alternative lending. We'll adjust our training to make it easier. But as of right now, so there's nothing concrete. California is the state that keeps pushing for it. They want to categorize business loan brokers with similar to like mortgage brokers, make them subject to like licenses. And sometimes the line gets blurry in California. They get confused a little bit. But yeah, it's nothing like across the board that requires someone to be licensed, just like an insurance broker or a mortgage broker or a real estate agent.
Is there a reason why you never collateralize the loan? Like, wouldn't it make sense from like a default standpoint? Like, because you mentioned the rate is 3 to 5%, and some of the loans you're fulfilling in-house. Why not have like a collateral option as well? So if it defaults, you can just take the asset back.
So we have asset-based lenders. It's less common because of the businesses that we deal with. For example, we have commercial real estate funding options. Someone wants to build a shopping mall, or they want to, they have a field right next to their gas station and they want to build that up. So that's when we go into like asset-based lending. Those are options. Those are like a longer process that could take like 60 to 90 days because there's a lot more involved. But for everyday deals, the type of customers we deal with, they're not in a situation to provide collateral, right? So that those kind of options exist because there's a demand for it. So we have both available depending on the customer, but 80 to 90% of the customers will be non-collateralized based on the future revenue or the credit.
Hmm.
Because if you do
Is
collateralization, that's a totally different funding criteria, totally different set of lenders and things like that. And many people want the money a lot faster than going through that whole process.
hmm. Is the so what are you? I'm guessing you're the person who's getting the loan is signing like a note, or what kind of document is are they signing
On what option?
to get the loan? Is that like a normal, just like a bank loan application? And what do they actually sign?
Yeah, they sign that they're gonna pay it back. We get a copy of their driver's license before we deploy the capital. We do a funding call. Funders usually, lenders usually use a company like Plaid to be able to log in their bank account to confirm that everything they have on the statement matches what's in the bank. They didn't like withdrew $100,000 last minute or anything like that, and the funds are deployed.
Okay, I see. Um, One question I had, I asked earlier, I don't think it was answered. How do you rank the funders, right? So if say there's a buy box or like a criteria box that matches multiple funders,
Mhm.
right? So there are five different funders who will potentially say yes to this file, right? How do you rank them? How do you know which one to send first? Or are you sending to all five, and whoever responds first gets that loan?
No, we don't like to blast it to multiple people unless it is truly a good match for a bunch of them, because we don't really want to have the same lenders who do the same thing and have like five of them. So that's more like an underwriting question. So they look at the file and decide that, hey, this company is more like this funder is more likely to fund it. We grade it based on the answers I've given you, right? What the merchant provides and the documentation, and a decision is made that, oh yeah, this is a B paper, and these are the B lenders that we have, but the customer is okay for waiting a little bit. So maybe they're a better fit for like a business line of credit. Then out of those five, only two of them provide business line of credit, and they go with that option. And out of the two, some of them provide it up to a certain amount, some of them provide up to a certain amount below that. And some lenders have restricted industries. They don't touch trucking. The others love trucking. Some don't touch construction. That's why the back end, that part is the whole underwriting process that we've kind of, honed in over the years.
Yeah. So you're saying the fact that there's like a niche within a niche within a niche, by the time it comes to the matching portion, it's usually like one or two left, which
Oh
are
yeah,
like a good
absolutely.
match.
Because we would not want to have 10 lenders who do the same thing, basically, right? So our goal is to have coverage, so we can confidently say that if we have the minimum requirements, we could find a funder for that deal.
Hmm. How do you find these funders? Like, I'm guessing it took a while to gather all these funders and be part of that network, right?
Correct. Yeah. Because of who we are, they know who we are, and we do a lot of volume. Our network, the size of our network, the new brokers, existing brokers that we attract.
Yeah. So how, like, is it like an outreach effort that you do, or are these like mostly incoming through
They
referral?
usually reach out to us and we vet them, their processes, and what kind of deals they found. We compare it against who we have already, why that would be a good fit for our network. Can they assign a specific representative for our network? Because we don't allow lenders, if they just give us, yeah, if your brokers can call this 1-800 number and things like that. So the team that does the processing need to have a point of contact. So we have our own requirements.
Hmm. And then anyone can apply. Like, for example, if I have extra 500,000 sitting around and I want to start funding to other people, other people's deals and other people's businesses, can I apply to be a funder in your network, or does it have to be like a financial type institution?
Yeah, we want expertise in the area, because if you just because you have the money, then we have to train you on the business itself, because you wouldn't know all the things that I just talked about, the underwriting and the risk factors and all of that. There's no shortage of money in alternative lending industry. We usually do not need outside individuals, and our brokers, as they start making more and more money, some of them turn into partial syndicators, meaning that they can pitch in their own deal. So, for example, one lender is funding $100,000, and this broker is in our platform for 2 years, and they're really experienced now. They can tell the broker, you give them 90,000, I'll pitch in the 10,000. So it's called partial syndication. So that way, partially they make money as a lender, and they also make money as a broker.
Hmm. So you're saying so if I wanted to be a funder, I would need some experience in lending my money to others?
Correct. Yeah, as an individual, yeah, we wouldn't want to deal with an individual just because they have money, because it's just they all the things that you asked, like it requires like years of experience for them to understand. And if they don't understand it, they need to do their own underwriting. They need to be staffed properly. We just don't do that. It's just not worth the headache, honestly.
What is the minimum criteria that you look at that person? Is it like it needs to be, say I'm like a hard money lender, like
Yeah.
I lend in real estate, I lend to like one-on-one to other investors. Does that qualify me as a better uh, participant in your network or still not?
No, we need to see years of experience. You're funding that exact deal that you want to participate in. Do you have your own underwriting team? Like who's underwriting these deals? What's your default rate? What's the customer service look like? Because you're collecting the payments from the customers on a weekly basis. What the accounting looks like. So we only work for us to call someone a lender. Well, they need to be an actual lender doing this.
Hmm. So if tell me like a profile of what an ideal lender look like.
Usually they have an office, 100 to 200 employees. They've been doing funding for like at least 5 to 7 years. They might have funded over $1 billion. Yeah, those are like the criteria.
I see. And so essentially they already have existing people that come to them for funding and they're looking to expand. So they go to Oz and say, well, you have all this big network. Why don't you be one of my lead sources?
Correct.
That's right. Okay. I get it. Um, all right. I think we covered pretty much everything from the business perspective. I think let's move on to the actual goals and constraints. So you mentioned you had a revenue of 5.5 million. The goal is 24 million.
Mm-hmm.
And the biggest constraint was just hiring, right? Hiring people, training people, and making sure they can essentially be a value add in your company. So tell us about that. Like why is that the biggest constraint? Why are you do you have like in-house training modules where you can train them up quickly? And if you do, why is it not is it not good enough yet, or it takes a long time? Let's talk through that a little bit.
Yeah, we're growing too fast. That's the problem. And then we're kind of building those departments as we go. For example, literally in April, we're gonna have a new team starting up to manage our sales team, and they're gonna make it easy with our recruitment efforts. They're gonna help with that, hiring new SDRs, new sales consultants, and then we constantly go through structuring to add more layers, because when we started out, it was a 3 people company. Right now, it's like a 35 people company, right? And then that happened, pretty fast year over year. When we started out, we didn't fund some of the deals ourselves. Now we do. So that adds more complication. So that's the part, having like mid-tier managers that can do the hiring and training because I'm an active founder. I work in the business every single day. But that's the part that's making challenging, kind of keeping up with our growth and adding the right players without having to do trial and error, right? Because if you hire somebody and we keep him on for 3 months and we have to let them go, that costs 3 months for our business is too long. It's just we need to find the right people and grow it. We're doing it right now. But yeah, so with our growth trajectory and all the things that we're doing, we have a whole department that is focused on AI-based products. Like last 2 months ago, we released 3 AI products that makes it easy for our brokers to connect the referral partners like CPAs, accountants, bookkeepers, bankers. They used to do that manually. Now they can do that through AI products. So we're making a lot of moves on the technology too, which that requires a specific type of talent. So that's what I meant by like the bottleneck being the hiring part.
You mentioned 35-person company. How is it split into like different departments? Like how many people in sales, how many people in technology and HR, legal, stuff like that?
So our coaching department, along with support, is about 12 people. So we provide a lot of ongoing coaching, managing the lender relationships, holding them accountable, reporting from them, and handling customer service tickets. We have a marketing department. You see our ads. We have a head of marketing, and he has his own staff like email marketing, text message marketing, paid ads, and we have the head of marketing is connected to specific representatives from Google. So we're really connected at a higher up at a Google Ads level. I was just at the Google office in New York City. So all of that happens. We have a live events division, like the head of coaching handles that. We do 2 to 3 live get-togethers with our network. So that requires a lot of planning. And our sales team currently is 8 people. And we have an SDR team. I think they're small right now, 2 to 3 people. So we have the core of the team, and we have also contractors for the events that we hire per event basis. So it's a bigger than 35 depending on the time. But as you can see, there are like many layers to it.
Yeah. And the whole team is in the US?
No, the bulk of the team is in the US. We also have some representatives from Mexico. They're expats. They're US people, but they live in Mexico. We have a few people in London. We have a few people in Philippines. It's like I don't want to say global company, but we have presence in many countries.
Right. I'm guessing the target, your customers, the people you're trying to turn them into loan brokers, they have to be from the US, or can someone do this from outside the US as well?
They can be anywhere as long as they're targeting US-based businesses for funding. Because we provide funding in the US. We provide funding worldwide on those super large deals, like the hotels and things like that. But for 95% of the deals, the businesses are in the US, yes.
I see. So as long as they, I'm guessing, speak fluent English, and they're targeting.
Yeah. So as long as they speak the language of the businesses, that's fine.
Okay. And all these, so the potential person who's looking at becoming a broker, like how would you define like an ideal customer profile or ideal client profile for that particular avatar?
Yeah, so we have 2 types of people who would be a good fit. One is who is in a parallel industry, so the skill set is pretty similar. They're in mortgages, financial services, insurance sales, or real estate, right? So the skill set is very, you can transition into this. They're dealing with some type of funding. Those are the people who come in. They see this as an easier path for them. Like if you see the mortgage statement or how a mortgage deal is structured, a lot of paperwork back and forth. They see this as like a simpler choice. The second audience is usually someone who's going through their midlife, like age 40 and above. They have a professional career, they have a job, but they want to transition out of that and become an entrepreneur, right? So they probably put in 20, 25 years into corporate, but they think it's the time for them to be own their own business, and they get that funding will not go anywhere. There's also a lot of concern about what AI will do to people's jobs. Like we have mid-level managers, they're kind of concerned about it. They notice that, no matter what happens with AI, people will still need money. Then that's a good transition for them to start this, even if it's like a part-time, and transitioning out of their jobs.
How much work commitment is there? Like how much work is expected to be done to be
when
successful?
we qualify people, we tell them, hey, are you okay? Are you able to put in at least 1 to 2 hours a day on average? Because there is work to be put in. Obviously, this is not a get rich quick scheme. The money is not going to rain. We're going to train you, but you need to be in a position to invest some time into the coaching, bringing leads. That's why we have tiers, meaning some people come in, they just want to refer and earn, right? They already have contacts. They just want to, like, these are usually professional people, accountants, like bookkeepers, financial advisors. They're not interested in shutting down their business and becoming a business loan broker. They're interested in adding funding to their existing business. So those people, for them, it's like a simple marketing campaign to direct people to us, and we do the funding and they make money. If someone wants to transition out of a 9 to 5, then they can start as like a refer and earn, and then they go over we call it the partner and earn and broker and earn. So as they go, they learn the entire process from front to back.
How much money can someone make working 2 hours per day? And how many deals is that? Like how many loans do they have to close to make that much money?
Average deal, funded deal, pays $2,000 to $4,000. So it's like pretty lucrative. So if their goal, like a lot of people come to us and they want to supplement their current income. So an additional even 2-3K would be great for them. Just like 1 to 2 deals a month, that's achievable if you're putting 1 to 2 hours a day. But if the goal is, if someone says, yeah, I want to build a company, I need like 50K, I need to make like 50K, we tell them, all right, so that's conflicting. You're telling me that you're already putting in 60 hours to your job and you want to build a 50K company. So how are you going to make time for this? Are you okay with starting as like a refer and earn, kind of build your way up there? And then along the way, you need to build structures, because if you want to fund 10, 15 deals a month, you need to, invest more time into it. And then if you want to go to like a broker shop, like have an office and have employees, well, that's definitely full time, right? So like some people come in, they have the budget, they want to run paid ads, and they want to get like 100 leads a day. That's doable, but then you need a team that's kind of call on those leads, qualify, hand it off to us. So we kind of match it to what they're trying to accomplish and help them set up like realistic goals with what they want to accomplish.
Hmm. Has anyone successfully made it like a full-time business where that's all they do and they make like more than 6 figures per year?
Oh, so many people. I mean, on our YouTube channel, we interviewed more than 100 people, and they did that. They came in, and some used to be like an Uber driver, ex firefighter, single mom, and things like that. So yeah, we do see it. Obviously, they take it a lot more seriously than like a side income. But yeah, we have a
Hmm.
lot of success stories of people doing that.
Yeah. So tell us about that. Like, what a successful student who has made more than $100,000. Uh, how like what do they do? Like, tell us about like, are they running paid ads? Do they have like an existing audience? Like, assuming someone who doesn't have experience in sales and marketing and doing like talking on phone with leads, what do they have to learn, how much time they would have to put in, and what's the path they have to take to become successful at this?
Yeah, those people usually need to focus on generating leads for cheap or free. The best ways to do that is strategic referral marketing, like going to Chamber of Commerce, BNI meetings, LATIP meetings, and finding more referral partners, because they have limited time and they're not salespeople, right? So that's how I grew my brokerage before BLB. I made a lot of friends in the banking industry and accounting industry, and they started referring people right and left, so I can still be at my home and receive the leads. And what I didn't have back then is a place to hand it off. So I need to figure out on my own, like, who do I send it to? How do I do it? Now we provide it. So it's like the least expensive and the least time consuming way. Instead of going after people who need funding, going after people who have an audience. So you don't have to grow your own YouTube channel, Instagram channel, or TikTok. You find people with authority. You just build an army of referral partners.
Right. And on the flip side, if you do have experience in sales and marketing, and maybe you already have a YouTube channel, then it becomes a little bit easier because then you can kind of like tap into your existing audience.
It could be easier, especially if you know the sales part. Then those people usually want to become a full-fledged business loan broker. Like, they're not just referring or earning; they can collect documentation, and when we give the offer back to that broker, they can actually sell the loan. So that substantially increases that the average commission goes to like $3,000 to $5,000. So for them to reach their goals, it is a lot faster because they have those skill sets. We also have people who come from like technical background. They want to be like a manager, right? So they get a couple of leads, but then they hire people who have those skill sets. They can hire like a VA from Philippines or India, whose job could be just using LinkedIn to get the leads and hand it off to BLB Network. So they can still manage the business behind the scenes, like behind their brand, but they don't have to be active day to day running it.
Hmm. So you're saying if someone has end-to-end sales capability, they can find the leads, they can nurture the leads, they can collect documentation, they can negotiate, go back and communicate this was approved, they will make a much higher commission. Is
Correct,
that
because
correct?
they're doing, like, for example, if we get the file and sell it, we have to pay commission to our closers, right? So they're making less percentage. But if they're doing everything themselves, like we have brokers, for example, Daniel, who's been with us for like ever since inception of the program, he joined. So he was at that point was making like 15, 20K a month. Now he's at like 50, 60K a month with a part-time assistant, but he does the work himself. Like he knows where the file will go, what kind of deal. He can fund different types of products from SBA, the equipment financing to term loans, the business line of credits. So he's an
Mm.
expert. So when he talks to someone, he knows exactly what's going on in their business, and he knows the likelihood of that person getting funded. So someone like him, he works from home still. So there are different ways to build it. Yeah, those people can just go all the way faster than someone who needs to build a skill set, or they need to hire someone, or not get involved with that process and have us handle it.
Yeah. Question, like, I'm guessing someone watching this must be thinking in the back of their head, clearly you have this huge network on the back end, right? You have all these lender relationships. So why not start like a department within your existing company where all they do is find people who want loans and just service them directly, because then you don't have to pay these 3 to 5k commissions to the brokers you're training, right? And you make more money and you're already leveraging your existing pipelines.
Yeah, but you pay money for marketing. Right now, we get leads without marketing.
Oh, I see. Okay. So you're saving on the marketing cost. So you
Yeah.
essentially, so you're saying you rather solve, because marketing is expensive, you rather have other people take on that role and you give them commission than you tackling that problem, right?
Yeah, it's
So
like
that
sharing the money, right? So there are a lot of people like big, we call them ISO shops, right? They exactly do that. They have like 200 people. They do their own marketing. They fund everything. Like still stays in that closed circle. Ours is like a network, right? So it's like we give people the opportunity to build it, but along the way, it helps us grow the business. We have our own army of business loan brokers, basically, so we don't have to rely on our power to generate leads on our own and things like that. And each person can not only learn the business, because there's no way we're going to tap into the entire potential, but having a network of 7,000 people in our and they're loyal to us, they come to our live events. It's like our own tribe, basically, of business loan brokers focusing on a niche area.
Hmm. So is that how you got started? First, you were like, "Well, I'm just gonna find all my own leads," and then you're like, "Well, there is no way I can find everyone. I rather have affiliates do it for me, so I can kind of like manage the relationships."
Not
Is that
really,
how?
no. So I started out by cold calling and telemarketing because my background is sales. I used to call 600 people a day through a power dialer, and the 2, 3 days of the week, I used to just cold call, right? And it is
Hmm.
brutal. I was making money, but I got burned out. Like I don't think anyone enjoys that experience. I said, okay, so I'm a sales guy. I don't know anything about marketing. So I started messing into marketing coaches and courses and things like that. Learn email marketing, paid advertising. I said, this is interesting. It's working for me. Then I started like a marketing agency. And that agency was targeting basically lenders to do marketing for them. So we became a marketing agency helping lenders get more online deals, because back then, and still, some of them still get their leads through telemarketing and cold calling. We introduced them to like,
Hmm.
hey, you can actually do paid ads. It's going to be much cheaper than employing 50 people on the floor. And we grew that to a size. But one thing I noticed is that as I did more videos talking about lead generation, we started attracting people who want to get into the industry, which was an angle I never thought of, honestly. I just wanted to grow my agency to help the existing big loan shops and the lenders grow. Then we started building like an email list of people saying that, hey, man, like I like how you teach. Can you start like a training? And that went on for like a year. I didn't do anything about it. But then I told my list, hey, if you guys join, I can run like a class live for like 8 weeks. I have the curriculum. If you pay me a small amount, I can show you how to do this. Then I noticed that most of my list just bought it. That was like the first wake up call, right? I'm like, because I know people were saying they wanted to learn, but I didn't know they were that serious about it. I think we charged like $900 per person. And I told them, I don't have any of the curriculum ready. We'll just do one live call a week. I'm just going to jump in and teach you, and you're going to ask me questions. And those live calls turn into like training sessions. Then we noticed that there's way more demand than I even anticipated, and it slowly turned into like a coaching program. Then we noticed that
Hmm.
people are getting success and bringing leads. We said, wait, why are we going to have this retainer relationship with lenders when we have like fresh people hungry and they want to grow this? And we slowly transitioned into doing that because of the demand. So it wasn't like a grand plan that I came up with. It just happened as
Mhm.
we were creating more content online about how this works.
Yeah. Speaking of creating content, and I, as I mentioned in the pre-call, your ad started following me after I
Yeah.
visited your website. How so? What's is that your main channel on how you're trying to attract more people who want to become loan brokers? Paid ads? Like tell us about your acquisition strategy.
It's a lot of like we have I think over 500 plus videos on our YouTube channel. So a lot of people find like first exposure to that could be one of the videos, and they usually don't know what I'm talking about because no one kind of thinks about becoming a business loan broker. And then we start retargeting ads. We also run paid ads too to the fresh audience. But yeah, that's like our process of showing someone, informing them, because on our end, we're not like a real estate, crypto, stock market offer that everyone kind of knows about and thinks about, like an Amazon FBA offer. So no one knows that this industry exists, right? But our videos over the years have been seen by like 35 million people. That's a lot of people, and they come back. And although we don't have tens of thousands of views on each video, I think right people see it, they get it, because we're such a niche offer, and intentionally we don't overgeneralize it. Like we stay very specific to alternative lending, so we want to attract the right person who actually understands the opportunity. But yeah, that's our marketing model.
Hmm. Which is really good. So you started with organic YouTube videos, and then you started adding retargeting ads to
Correct.
retarget people who already watched one of your videos, right?
Hmm. Hmm.
And then you added paid ads. So are these paid ads YouTube ads or Facebook
It's
ads or
mostly, yeah,
PPC?
we're on Facebook too, but most of them are YouTube ads. Yeah.
I see. So YouTube has been your biggest lead source, right?
Absolutely, yeah, because it requires someone to consume a lot more content. Like Facebook and Instagram, they're good for like easy, quick leads. But our
Mhm.
audience, they need to like, for example, someone who joins our network on average watches 16 hours of my content before they make a
Mm.
decision. And we prefer it that way. So they're like a lot more informed about this. Again, we don't have the benefit of like a known hype industry. Like, anyone is following AI, starting an AI business, right? That's like a ready to go audience, and you compete for the traffic. We don't have that issue, but the issue that we have is the lack of awareness. So we want them to consume a lot of content before they come to us and say, yeah, I get this. Money is a good product to sell. Obviously, you have a system. Let's talk. Then we talk to them to find out if that makes sense.
Hmm. Okay. So going back to the original question where we started the episode, so we can close that loop.
Sure.
What's the plan to get to 24 million? Are you just going to do more and more of the organic content and more paid ads, or there's a different tactic that's up your sleeve that you're going to deploy soon?
Well, my understanding from my mentors too, what got you here will not get you to the next level, right? So yeah, you can do more stuff. That's perfectly fine, but that's such a big goal, and I like to set like goals like that. It's gonna require restructuring, more hiring, leaning on technology a lot. That's why we have a department on AI, creating a lot of AI based tools, because a lot of people are lost on what to do with AI. Yeah, you can upload your picture and make it look funny, but it goes a lot more than that. And people are starting random AI businesses without understanding. My philosophy is that, yeah, you should learn AI, but as the founders, my job to show you how AI can help you fund more deals and get more deals. So we're gonna make big moves on the technology we're already making. Like we deployed the software, currently have about 250 users. We're taking the beta and improving it, make it easy for them to get leads, get referral partners, funding assessment. Like all of these tools didn't exist last year, right? It's the beginning of last year. So it's happening over the past 4 or 5 months. So we're going to make we have the plan in place. It's just, like I said, hiring the right people, making those moves so loan brokers can adapt to the AI age without feeling like they need to use this tool, that tool, and figure out how the whole LLMs work.
You mentioned referral partners. So you're trying to make your existing brokers more valuable so they can get more deals and you can
Absolutely.
make more money, right?
All of us collectively, yeah. So
I
the
see.
people who partner up with the brokers, they make money. brokers make money. Obviously, our network makes money. So that's my plan. Create like a flywheel effect of our brokers
Mm.
having tens of thousands of referral partners and totally dominate the loan brokerage industry. So even people who don't want to become a business loan broker, like almost, I think every business needs to have add funding to their business, no matter what they're selling. They're going to come across people who need funding. So they need to have the resource for that. And we're just capitalizing all of our network to go that route. Besides traditional, like if someone wants to scale it fast, paid advertising is like adding fuel to the fire, right? So the cost
Mm.
per lead in our industry is very cheap. You can get someone to fill out a form for like $4 or $5. You can grow that, but that requires you, like if you're spending $100 a day, you're going to get 20, 25 leads. That's awesome. But then you got to be the type of person who's going to follow up on those leads and call them and start nurturing campaigns. We provide all of that. Like we provide a CRM that's loaded with those marketing campaigns. But an easier approach would be to spend that exact time to look for referral partners, existing businesses who want to grow their network. There's so many
Yeah.
companies with a Salesforce out there, right? So they have a team of like 100 people out there hunting, selling insurance, liquor, cable, phone services. So all of them can also, like that's how I started out. I was selling, like I told you, these POS systems. Another loan broker approached me saying, you work with restaurants, like, are you having problems selling your services because they don't have the money? I'm like, yeah, of course, everyone does. He's like, what if you add funding to it? That was my start. So I want to kind of weaponize our brokers to with those so they can create like these massive partnerships.
Yeah, no, that's very smart. I recently published my book, The Land Business, and one of the principles, that helped us in our business, was like, there are like two ways to make more money, like in business. One is to spend more money in marketing and ads, and the
Mm-hmm.
other way is to make your existing customers more valuable, right? The LTV, lifetime value of
Oh
each
yeah,
existing customer. So it seems like you're thinking in the right direction where you want the existing customers to become more valuable because the marketing costs just keeps on going up, right?
absolutely.
As every year, Facebook ads and YouTube ads keep on getting more expensive.
And Abi,
So
the
I
problem is that, sorry to interrupt you, but when you stop marketing, it is as if you didn't exist, right? So you might be
yeah,
spending money
yeah,
on ads, but you're not really building a platform where a referral market, you can work really hard for 6 months and have 100 referral partners. It solves
yeah,
your lead generation problem kind of permanently, So you don't,
yeah.
because you're using the network effect.
Yeah, yeah, that's really smart. Oz, this has been great. If someone's watching this, they're like, "Oh, I want to become a loan broker, or I want to, be part of Oz's funding network." What's the best place for them to reach out?
We just recommend them to go through our website. We have a lot of free content, and we also have the options to schedule a call with our team and have a discussion to find out if this is a good fit. And that's businesslendingblueprint.com.
All right, Oz, it has been a pleasure. Thank you so much for spending time with us today.
My pleasure. Thanks for having me, Abi.